Federal Reserve, because how soon is soon? The Fed dropping hints that its fight against inflation might be tapering off, but experts warn of a potential mismatch between when the central bank could reverse its hawkishness versus when the market might be expecting tapering. Joining us now is Captain Kaminski, AlphaSimplex Group Chief Research Strategist and Portfolio Manager. Good to see you, Katy, as we look at what is going on here in the markets. Do you think there is still this fundamental mismatch between what the Fed is telling us and what the market actually thinks the Fed is going to do?
Yes, I think the key is that there's a time horizon difference. I mean, the market is ready for things to change quickly, and the Fed is going to tread lightly and calmly through this situation and take their time to make sure that they're making the right decisions. And I think the market, one of the big challenges is so many people have had money on the sidelines, and all this quarter, we've seen people wanting to put that money to work. And the fear is now, with the rally we've recently had, that there's less of that trade-off in terms of opportunity set. So I think that that's where everyone right now is a little bit paused to see what happens next.
We're going to get meeting minutes this week, but of course there's going to be an abbreviated trading session. However, the bond market, that could potentially react on anything noteworthy that comes out of the meeting minutes. Is there anything from your perspective that could significantly change the equity market course, though, once markets do reopen on Friday?
Yes, I mean, I think everyone's going to be watching the minutes on Wednesday. Really, the Fed has been the driver of market movements. And also we have the point that, I mean, I think we generally think that we have to see the bottom of the bond market before we can see any sort of indication of how bad it could be for equities. So I think most of the focus is still on fixed income markets these days, and equities are just sort of a byproduct of what's going on there.
Can you call, or do you see the conditions in place that would suggest the bear market is over?
Well, I think for us, we have seen some positive mixed signals, both short-term versus long-term. So we're pretty much neutral in equities in terms of our stance. And that is a positive sign. I think the other positive sign has been that we've really seen people starting to consider whether or not fixed income as an investment in the longer term is starting to be attractive. And so you're seeing sort of the curve, although the curve has flattened a little bit recently, we did see some steepening, which is a good sign that investors are ready to put some risk to action in the fixed income markets. So I think for us, it's finding that bottom of the fixed income markets to figure out when we'll be sort of out of the woods from this cycle.
You know, Katy, I want to ask you a quick question on commodities, because the Wall Street Journal just reporting that Saudis and other OPEC members are considering a production increase, which would be quite a turnaround from what we have heard about, an increase of up to 500,000 barrels a day. I know you're watching commodities closely. That's been one of the, not in the shorter term, but still for the balance of the year has been a winning trade, whether you're looking at commodities or energy stocks. Is that something you still want to allocate to?
I think yes. I mean, I think it's going to be a question of how the situation of demand, and particularly China, plays out. But in general, you're really seeing that commodities were a big driver earlier in this year of the inflation narrative. And I think as we move into the winter season, particularly in North America, and as we see some evidence of potential dissipation of issues with demand, then we could start to see more interest in commodities, and they may play a more central role in investors' focus going forward.
Katy Kaminski, AlphaSimplex Group Chief Research Strategist and Portfolio Manager. Good to see you. We'll talk to you soon.
Thank you.